Let's talk about finance. It's an industry that, let's be honest, a lot of us don't really trust. And for good reason, right? It gets blamed for huge economic crashes, for losing people their life savings. But at the same time, finance is also this incredibly important, totally necessary tool for any modern economy. So what's the deal? How can it be both of those things at once?
Well, it really does have two faces. On one side, you've got the promise. This is the finance that funds brilliant new ideas, that builds businesses, that makes global trade even possible. But on the other side, there's the peril. The crashes, the inequality, the life savings that vanish. It's a super powerful tool, but like any powerful tool, when it gets misused or just gets too big for its original job, it can do some serious damage.
So to really get our heads around this, we're going to follow the money. We'll start with what finance is supposed to do. Then we'll look at how it got derailed into what some call a giant casino, see what that means for us in the real world, and then ask the big question. Can you actually have too much of a good thing?
Okay, so first things first. Let's go back to basics. In a perfect world, what is the actual textbook job of finance? At its absolute core, its job is surprisingly simple. Think of finance as a matchmaker. It's supposed to take all the unused money, all the savings just sitting there, and connect it with people who have big ideas and can put that money to productive use, like starting a new company or building a house. And here's how that perfect world scenario is supposed to play out. You and I, the savers, we put our money into the system. The financial world acts as that go-between, and boom, that capital flows to entrepreneurs, to new homeowners, to businesses. The result? The real economy grows. It's a beautiful system, a virtuous cycle where everybody wins. At least, that's the theory.
But, and this is a huge but, the financial industry today looks very, very different from that simple role. And that brings us to the absolute heart of this whole explainer, something people are calling the 15% problem. Rana Faruha from the Financial Times has this amazing way of explaining what's gone wrong. Picture an hourglass. You've got all the savers at the top and all the borrowers and builders at the bottom. Finance, it's just supposed to be that tiny, narrow neck in the middle, just helping the sand flow smoothly from one side to the other.
Okay, get ready for this, because here's the shocking part. Studies show that only about 15%, just 15, of all the money sloshing around in the financial system today actually makes it into the real economy. You know, the part that funds new businesses and actual projects.
So you're probably asking, where in the world is the other 85%? Well, it's pretty much trapped on a financial merry-go-round. It's money just used to trade things that already exist. Stocks, bonds, houses. Sure, all that trading pushes prices up, but it doesn't build a single new factory or fund a single new invention. And this is where we get to that idea of Wall Street as a giant casino. We're talking about that huge 85% loop. You see, there are two totally different games being played. Productive investing, that's a positive-sum game. The goal is to make the whole economic pie bigger so there's more for everyone. But speculative trading, that's a zero-sum game. The pie doesn't get any bigger. The only way you win is if somebody else loses. It's all about fighting for a bigger slice.
And hey, don't just take my word for it. The master himself, Warren Buffett, has said it. He declared that the markets have kind of lost their way, shifting from a place to build long-term value into, in his words, almost totally a casino. And the thing is, the house usually wins. You've probably seen those little disclaimers on trading platforms, right? The ones that say something like 80% of retail traders lose money. That's literally the financial industry's version of a smoking kills warning. It's them telling you, hey, just so you know, the odds are really not in your favor. Okay, so this isn't just some abstract problem happening on computer screens. This financial casino has real, tangible effects that ripple out from Wall Street and right onto your street. Let's talk about two of the biggest costs. First, there's a massive brain drain. Our best and brightest minds, the ones who could be curing diseases or inventing new technologies, are pulled into finance. And second, it pours gasoline on the fire of inequality, because the whole system is designed to reward people who already own things, which just widens the gap between them and everyone else. And I mean, the rewards are incredibly concentrated. Just look at this number. In the US, the wealthiest 10% of people own a staggering 85% of the stock market. So when you hear on the news that the market is up, for the vast majority of people, that means pretty much nothing. And this chart just lays it all out. The result is this growing chasm.
Since 2010, the US stock market has grown 3.5 times over. Meanwhile, the median wage, the paycheck for the person right in the middle, has barely moved. It's like one group is taking off in a rocket ship, while almost everyone else is still standing on the launch pad.
So let's be really clear here. The point is not that finance is evil. Not at all. The problem is that its scale has gotten so enormous and its focus has become so speculative that it seems to have lost touch with its original mission. Just remember what its job was supposed to be, right? It's the oil in the engine. Its purpose is to reduce friction and help the real economy, the engine, run as smoothly as possible.
And that brings us to the key takeaway. It's like so many things in life. The poison is in the dose. A little bit is essential. Way too much can be toxic.
And that engine metaphor is just perfect for where we are now. Of course, a good engine needs oil to run. But what would happen if you just submerged the entire thing in a giant vat of oil? It would seize up. It would stop working. And that's the danger, that we've poured so much into finance that the real economic engine is starting to sputter.
Which leaves us all with one final big question to chew on. If the financial system has become a machine that mostly serves itself instead of the real economy, who on earth has the power to fix it? And maybe more importantly, who has the will?